Ms. Nurul Izzatira binti Ahmad Jeffrey, matrix number 2019476078. Today, I would like to talk about the basic characteristic of volume. Before we move further, let's take a look at my presentation highlight. There are 4 things that I will cover today, which are introduction, importance of volume in technical analysis, principle of volume interpretation, and conclusion. Without wasting our time, let's take a look at introduction first. So, what is volume? Do you have any idea? In trading, volume can be defined as the number of units that change hands for stock or future contract over a specific time. Traders rely on volume as a key metric. This is because volume lets them know the liquidity level of an asset and how easily they can get into or out of a position close the current price. In other words, volume analysis is a technique used to determine the trades that trader will make by discovering the relationship between volume and prices. The two concepts behind volume analysis are buying volume and selling volume. For the buying volume, buyers have control when the price gets pushed higher. Buy volume occurs at the offer price and represent at the lowest advertised price at which seller will part with their shares. When trader buy shares at the current offer price, it shows that the traders need the stock and is included in the buying volume metric. Meanwhile, for the selling volume, sellers have more control when the price gets pushed lower. Sell volume occurs at the bid price. The bid represents the highest advertised price buyers will offer. If traders want to sell at the bid price, it shows that they do not want the stock anymore. Next is importance of volume in technical analysis. There are 5 important, which are entry and exit price point, identify momentum and confirm a trend, signal to sell and buy, interpretation and better understanding. The first one is entry and exit price point. In technical analysis, investors tend to find entry and exit price point. So, volume analysis provides hints about where the best entry and exit points are located. Next is identify momentum and confirm a trend. If trading volume increase, price generally move in the same direction. That is, if a security is continuing higher in uptrend, the volume of the security should also increase and vice versa. Next is signal to sell and buy. Trading volume gives a signal when an investor should take profit and a security due to low activity. If there is no relationship between the trading volume and the price of security, this signal weakness in the current trend and a possible reversal. Next is interpretation. Volume can offer a new dynamic in investor interpretation of crowd psychology. The last one is better understanding. Analyzing volume trends gives investors a better understanding of how and why price pattern work. In effect, the study of the characteristic of volume gives greater depth to the weight of the evidence approach described earlier. Next is principle of volume interpretation. The first one is volume goes with the trend. As you can see on the chart, it is normal for activity to expand in a rising market and to contract in a declining one. In this sense, volume is always interpreted in relation to the recent past. Next is volume move in trend. We know that when price moves in trend, this does not occur in a straight line. Instead, the price works its way up and down in a zigzag fashion. Volume trends are similar. As you can see on the left side of the chart, for instance, the solid arrows indicate an expanding volume trend and the dashed one declining trend. Next is volume leads price in an uptrend. Volume normally leads price during a bull move. A new high in price that is not confirmed by volume should be regarded as a red flag, warning that the prevailing trend may be about to reverse. In this chart, the price peaked at point C, yet the average volume reached its maximum around point A. The fourth one is rising prices and falling volume is bearish. In this chart, rising prices accompanied by a trend of falling volume is an abnormal situation. It indicates a weak and suspect rally and is a bear market characteristic. When the volume shrink as prices rise, the advance occurs because of a lack of selling rather than because of sponsorship from buyers. As you can see on this chart, the bearish trend will reach a point where sellers become more motivated and price will start to pick up on the downside. This is shown where investors can see the volume start to pick up as the price starts a sell-off. Next is exceptionally low volume is very bullish when confirmed by price and expanding volume. When the price volatility shrinks to almost nothing and volume does the same, this indicates total disinterest. When the situation is eventually resolved, this is often followed by an above-average price move. In this chart, for instance, price and volume fall to the kind of level where the slightest movement in either direction will signal a dramatic price movement. Next is extremely high volume after a sharp advance indicates exhaustion. When volume and price expand at a sharp pace but short of a parabolic blow-off and then contract slightly, this usually indicates a change in trend. Sometimes this is an actual reversal and at other times as consolidation. This phenomena is featured in this chart and represents a temporary exhaustion of buying power. The chart shows the price eventually selling off, but it could just easily have risen. All the volume increase is telling us is that buyers are exhausted and should expect a pause. When that buying is exceptionally heavy, a more bullish extreme in sentiment is indicated and is more likely to be followed by an extended period of price decrease. The last one is watch volume on release and reaction. In the chart, when the price experiences a small rounded top and volume experience a rounding bottom, this is doubly abnormal situation, since price is rising and volume is falling as the peak is reached. After the peak, volume expands as the price decline, which also abnormal and bearish. We have come to the end of my presentation. In conclusion, volume offers useful information when investing. It helps to control risk as investors can reduce losses. It also makes collecting the profit easier because many investors will want to buy the stock when the other investors want to sell. Volume also can be used to analyze the trend of a stock, helping to assess the likelihood that a trend will continue. Volume analysis is not perfect and it offers only supplementary information. So investors do not need to feel pressure to start analyzing volume to day trade successfully. Investing decision should be based on price movement first and foremost, as price movement determine profit and losses. Investors should formulate their trading strategy based on price movement and then add in volume analysis if it improves their performance. That's all from me. Thank you.